whoa, are you serious, Linda? So anyway, good evening, guys. As you can see here, I'm joined by our good friend and the top trader and market wizard, Linda Raschke, who has very kindly agreed to do this webinar. Linda, thank you so much again for being with us. So this is in your book, Linda, here, page 49. Okay, so let's read this section, guys. It's in your book. If positive economic news is released, the market sells off on that news. This could be perceived as an aberration. It's a divergence from what would normally be expected, but this too is the market's way of imparting powerful information. In this case, it may be that there's no buyers left, or that the news has long been discounted. And here's the interesting part in your book. Trade in the direction of the aberration. The market is never too high to buy, nor too low to sell. Okay, let me come out of this. So I got to tell you, Linda, when I read this in your book, I had to just for a moment do a double take because I wasn't sure if I was reading that correctly in your book, because I thought, whoa, are you serious, Linda? The market is never too high to buy, never too low to sell. What are you saying on there? Because maybe I misunderstood it. Are you saying the concepts of overbought, oversold are really meaningless? Or are you talking about risk? Are you saying, like, it doesn't really matter when you buy or what time you buy, it's a matter of how you control the risk when you get out, the exit? Because I know you mentioned that later in the book. So what do you mean by that? Never too high to buy, never too low to sell. You know, what about bubbles and oversold and overbought stuff that happens in the market?
Well, what you're saying is that you're putting a valuation on something based on your own experience, okay? And anytime you try doing that, it's going to, like, you know, it's not a technical approach to the market. So by saying something's never too high to buy, there's a lot of times where there's good relative strength and there's good trading opportunity, and you know, you might have a pullback and the technicals suggest that there's a good entry, but some people won't buy because they're like, oh, well, it already ran up 30%. I can't get in now, you know, that type of thing. And of course, you have to be mindful about, like, you know, when things start to get crazy. For example, if you looked at the lumber market, I don't know if you follow lumber over there,
No.
but it tripled well above historic highs. It went 3 times above the past all-time historic high. And so when it started taking out that past historic high, you know, a lot of people like, oh, you can't buy it here or something,
Right.
but you still could have made like 500%, you know, because think of it, it wasn't a squeeze per se, but there was a huge demand and a supply shortage because they didn't have people to operate the mills, you know. So you can't say, oh, the price is too high to buy if you think it's going higher. So of course you always have to be mindful of risk, but that's, you know, in any situation.
In your judgment, when you decide in your chart analysis or in your analysis, is there a point that you would say, you know what, I'm not going to get in now? I mean, is there a cutoff point for you at which point you say, you know what, I'm not going to get in. It's too dangerous to sell, or it's too dangerous to buy right now?
Well, I have a short time horizon. I'm not looking to buy for the next 2 months. So, I mean, when Tesla was running up and if I thought I could buy it in the afternoon and sell it higher the next day, that's what I'm doing, you know, and it could be a whole lot lower now, but my time horizon might just be a trade for the next day. So, you know, I can't let valuations color things for me.
You mentioned you trade Tesla. Do you trade options in Tesla, or is it shares, stocks of Tesla?
I was trading some options on Tesla earlier. I haven't made a trade there for, you know, 2 months.
All right. Okay. Is this because you're a day trader that you don't have this long perspective, or is it because of something you mentioned in Market Wizards to do with chaos theory and non-linear, the fact that markets are non-linear? Is that to do with it, or am I getting this wrong?
First of all, I'm not a day trader. I do make day trades. I would say that I almost always have 6 or 7 positions that I'm holding overnight. And there's a very strong edge to holding something overnight. There's a huge edge to, you know, if you initiate on the first bar going from low to high and you get range expansion, you know, and it's not a short squeeze and an overall strong downtrend, hold that overnight, because you'll sell it out above the high of that bar the next day. So that's a really good model. You know, it's kind of along the lines of Toby Craybell or volatility breakout systems or Larry Williams type of patterns. There's a huge edge between initiating one day and taking it off the next day or the day after, just because the noise level in the market's so much higher that you have a lot of back and fill and back and fill. 80% of the time, the market's doing this back and fill and back and fill. And there's a huge edge to that. And then, of course, the other 10% or 20% of the time, you have a very efficient markup, you know, or mark down, okay, where you get what could be called one-time framing, where there's very little price bar overlap between those daily bars. And I call those extended runs, or a strong degree of, you know, trendiness, persistency of trend. There's, you know, it's all a big semantics game. So you have these two alternating states, and one state's just about 20% of the time, and that's where you would want to ignore these concepts of overbought, oversold. You know, coming off a bottom, strong overbought reading is a huge buy signal. It's called a breadth thrust. Okay,
that's true. That's true.
Right. So, you know, everything's about putting stuff in context. But no, I mean, for me, I just find a ridiculously huge edge to initiating one day and holding it and getting out the next day or the day after that. If I'm thinking about where we're going to be from, you know, 2 months from now, I mean, look how much opportunity we had in the S&Ps just in the last week or two. What do I care where we're going to be 2 months from now, you know?
Yeah.
So that's really all that it means. It's a statistical thing that once you hit that point, and if you start continuing on higher, don't think that you know where that top is going to come, you know, or that bottom's going to come.
That's right. That's right.
Yeah.
As a matter of fact, you mentioned this in Market Wizards, that it's very difficult to predict magnitude, extent of a move. You can predict direction more easily, but the magnitude is much more difficult to predict. Which I think...
we're not in the prediction job. That's not our job as traders.
Right.
We're not trying to predict, you know.
Right.
I thought Soros, with his regurgitation of the theory of reflexivity, that wasn't his own original theory, but he hit the nail on the head. He says, you know, things are going to go further to the upside and further than the downside than people think.
One thing you do in your book, which is great, and by the way, guys, again, let me just mention again, get this book from Linda's website.
There's not many copies left. I don't know if I'm going to do another printing. Seriously.
We're going to make some. We're going to make your life much harder, Linda. Unfortunately. So look, but I do think you're right. You have actually succeeded in making something which is dry, you know, trading and chart analysis. You made it very interesting, and I think one thing you've done really well is put in bold, like I showed here today. You put in bold black letters the bits that are really important, so you can just quickly read that. What I would have done also is there are some really important bits of information, nuggets, I call this nuggets of information, which may get lost in the narrative, because some people, I know what they do, they just skim, and I hate people who do that, who just skim. Because
you can do that with this book. Just read the last two sentences of every chapter. There you go.
Yeah. No, but I mean, I can imagine someone totally missing out on some great bits of information here because they think, oh, it's a story, so it doesn't bother me. I'm just going to skip that part. But if they skip the story, so guys, I recommend if you read this, when you read this book, be careful about skipping some sections because you can miss out on some really good, interesting. And I really mean this because sometimes you read a section here and say, oh, wow, you're absolutely right. That is exactly what happened to me a few months ago. And I can use that in the future. So yeah, there is some really interesting stuff here and learning material in here. Okay, a lot of thanks to you, Linda,